What's up traders? In this video, I'll be performing a market forecast on EUR/USD. So stay tuned. Now this video is going to serve as my outlook for EUR/USD for the month of May 2025. I'll be showing you guys how I go about establishing a directional bias and then how I use that directional bias to identify potential areas to trade from and potential areas to trade towards. We're going to be starting here on the weekly time frame as we always do, and not much has changed in terms of our external structural range compared to our April market forecast video. We still have price action trading within this large bearish weekly external range, and our overall objective for price action is still a violation of this weekly weak low down here, which sits at 0.95358. However, the main thing that has changed from that last video is the fact that our internal structure has now shifted bullish once again here. When I performed my last market forecast, price action had been interacting with this weekly supply zone. And one of the things we were looking at was for price action to potentially continue trading lower from that weekly supply zone in order to facilitate a resumption of the overall bearish weekly continuation phase, which would look to initially target that weekly internal weak low. What we saw instead was the introduction of strong bullish pressure after this initial bearish reaction to weekly supply, which ended up facilitating a violation of the internal strong high at the time. Now, a large contributing factor to this bullish pressure which entered the market was the release of US inflation rate data on the 10th of April 2025. And so when we saw that internal structure shift bullish, we then saw price action push up to target that first weekly supply zone, which we had identified in our last video as being the next main area of interest for us should we see that internal structure shift bullish. Now, the fact that our internal structure has shifted bullish in here once again now simply means that we are experiencing a complex weekly pullback phase in here, because during this period of consolidation, we saw our internal structure initially shift bearish to potentially signal the start of our continuation phase. But then as it continued to consolidate in this area, we had the internal structure shift bullish by means of the FTC model being applied. Then it shifted bearish once again to signal a second attempt at potentially facilitating that bearish continuation phase. But now April saw our internal structure shifting bullish once again. And our internal structure shifting from one market state to another market state multiple times as it consolidates around the EQ of this bearish weekly external range on EUR/USD is a near identical but inverted picture of what we currently see happening on the weekly time frame of the DXY, where price action is also consolidating around the EQ of the bullish weekly external range, and our internal structure shifting from one market state to another market state multiple times. And this is effectively just price action trying to figure out what it wants to do next. The presence of these weekly supply zones obviously gave us the inkling that we could potentially see our internal structure shift bullish once again, and a high impact news event at the start of April is what was the catalyst essentially to help facilitate this first mitigation. So for the month of May, what exactly is it that we are anticipating to happen next? Obviously, our internal structure is bullish. We now have a new internal strong low located in here. We have seen an initial bearish reaction to this weekly supply zone, but we have not yet seen the establishment of our new internal weak high. So as price action trades in this area, as much as this weekly supply zone has the potential to facilitate our bearish weekly continuation phase, the potential start of that will only truly be signaled when our internal structure shifts bearish once again, i.e., when our internal strong low is violated. So at this current moment in time, we can start anticipating that potentially bearishness from here is going to help us establish a new bullish internal range and help us establish the new internal week high. That anticipation will come into play for any potential short trades that occur in this area or in this general range going into the month of May. From a weekly point of view, the overall objective for the weekly internal pullback phase, whenever it is confirmed, is going to be this weekly demand zone, which sits all the way down here. But we will obviously have valid demand zones on our lower time frames that sit much higher up in that internal range. If we have a scenario where this supply zone only generates a short bearish reaction before another bullish internal break of structure to the upside, this extreme weekly supply zone would then become our next main area of interest. Now, what I really like about this extreme weekly supply zone is the fact that we saw a sweep of liquidity prior to the POI's mitigation. We obviously have this nice trendline liquidity pool that sits just below, and we have the imbalance that price action could potentially come back in to fill. Now, it obviously remains to be seen whether or not price action can trade all the way up to this weekly extreme supply zone in the month of May specifically. Only time will tell, but we do have the Fed interest rate decision coming out in May, and that is the type of high impact news event that can definitely introduce a significant amount of not only volatility, but volume in the market as well. So from a weekly point of view, our overall objective is definitely still a violation of this weekly week low down here. But specifically for the month of May, we are focusing on the establishment of this new bullish internal range and any potential opportunities that may come about from that establishment. From our weekly time frame, we can now drop down to our daily time frame, which I regard as the internal of my weekly time frame. We can see that this is the point where our daily structure shifted from being in a bearish market state to a bullish market state, following this initial short-term bearish reaction to weekly supply. At this current moment in time, our daily internal structure is trading bullish as it is facilitating the daily impulsive phase, which generated this bullish external break of structure. And we currently have this bullish daily internal range. Now, this bullish daily internal range has been established using the 40 to 50% retracement rule. We'll have a closer look at that in just a minute when we drop down to our 4-hour time frame. But essentially what we had was, after price action gave us that major daily break of structure, it traded up and mitigated that weekly supply zone. And we then had that initial bearish reaction, which allowed us to establish this new bullish internal range. So because of the fact that price action is still trading within the impulsive phase, which generated that external break of structure, we have yet to see the establishment of our new daily external week high. That will come about when our internal structure shifts from a bullish market state to a bearish market state. But until that occurs, we understand that we are trading within this impulsive phase. We understand that that impulsive phase gives us a bullish directional bias here from a daily time frame point of view. And we can now utilize that directional bias to look for potential areas where a resumption of our impulsive phase could originate from. And straight off the bat, our main area of interest is going to be this daily demand zone, which is well priced within our most recent bullish internal range. This daily demand is going to be our main sell target for the internal pullback phase, which is currently taking place. And this daily demand zone is going to be the main POI where we could potentially see a resumption of our daily impulsive phase. Buys from this daily demand zone would obviously entail aiming for a violation of this daily internal weak high level. And if we are to see a violation of that daily internal weak high level, the next area of interest would then obviously be that extreme weekly supply zone up here. And then we obviously have a couple of ways in which we can execute in this area. Now, if you are a position trader, if you're a swing trader, you can very easily just come in here on your daily time frame and place a buy limit order directly on your POI, either at the open or the midpoint of the POI, placing your stop loss possibly below the internal strong low, or you can be a little bit more aggressive and place it below the POI itself, aiming for the daily internal weak high. Doing this is going to be a very preemptive way of getting involved in a buy, because you would be placing a buy limit order without getting any real confirmation that your internal pullback phase has ended and that your new bullish internal continuation phase has begun. This type of entry obviously has the benefit of not needing to be as active on your charts on a lower time frame, waiting for that confirmation, because you are comfortable and happy with being less precise with your entry, trading an area which, based on your approach, has the probability of generating that continuation. The alternative to placing a sell limit order directly here on the daily would be obviously dropping down to lower time frames, waiting for price action to interact with that POI, and then waiting to see that structure shift on your lower time frames before getting involved in potential buys. If, however, this area breaks down, or if it just generates a short-term bullish reaction before bearishness resumes and violates this internal strong low, then we would see the establishment of our new daily weak high. That would confirm that our daily pullback phase is taking place. And then our main area of interest will become this weekly demand zone down here, which we had identified on the weekly time frame. This POI is already said to be well priced within the new external range when it forms. We do have a refined daily demand zone that sits at the extreme of the larger weekly demand that gives a much better risk reward entry point should you choose to trade this area directly like so. But then understand as well that there is also a version here on the daily time frame where price action from where it trades now continues trading higher, generates a new bullish internal breakout structure, and if that were to occur, we would then see a new daily internal strong low form here, as that would be the starting point of the new internal impulsive phase which generated a breakout structure. And if we are to see this scenario play out, this daily demand zone would now not be a POI where we look to trade a resumption of the impulsive phase, but this POI would now become our first potential sell target for the daily pullback phase when it occurs. And then it becomes a case of identifying whether or not that daily demand zone is well priced in the new range. And that will obviously be determined by where our daily pullback phase originates from. And from our daily time frame, we can now drop down to our 4-hour time frame, which I regard as the internal of my daily time frame. And as we can see, our 4-hour time frame is currently trading bullish, as it is facilitating that daily impulsive phase. We have this most recent bullish 4-hour external range, which was established using the 40 to 50% retracement rule, as it came off of this initial bearish reaction to weekly supply. Here we have that daily demand zone, which we identified on the daily time frame. And this is obviously now that POI where we could potentially see this 4-hour pullback phase come into, mitigate before a potential resumption of not only our 4-hour bullishness, but also a potential resumption of that daily impulsive phase. We can see that here on the 4-hour time frame, we also have a refined 4-hour demand that sits at the extreme of the larger daily demand. And what this refined 4-hour demand gives is a better risk reward entry point here on the 4-hour time frame, should you choose to trade this area directly using a buy limit order. Again, you can place your limit order either at the open or you can place it at the midpoint, a very preemptive trade where you are getting involved without any confirmation that the pullback phase has ended and that the continuation has begun. And similar to the daily POI on the daily time frame, you also have the option to instead wait for price action to come into this area, mitigate your POI, and wait for your structure to shift from a bearish market state to a bullish market state to give you that confirmation before getting involved in a trade. The current overall objective for this 4-hour range is a violation of the 4-hour week high. You'll notice that I have my 4-hour internal week high coinciding with my 4-hour external week high. Similarly, I also have my 4-hour internal strong low coinciding with my 4-hour strong low. This basically just means that at this moment in time, my internal and external structure are overlapping, and that is a direct result of this strong bullish pressure that came into the market here, which effectively expanded my internal price action, leading to my internal and my external structure overlapping. But that just speaks to the relationship that exists between internal and external structure, and there is absolutely nothing wrong with having this as your bullish 4-hour external range. Now, we have seen an initial bullish reaction to this 4-hour demand, which again is a very nice POI because we had a sweep of liquidity prior to the POI's formation. We had this nice buildup of liquidity above the POI as price action consolidated. And when we came into that POI, we saw a bullish reaction. And this is why I mentioned on the daily time frame that there is a scenario where price action continues trading higher from where it is now in order to generate a new bullish breaker structure. And that is because of the fact that price action is currently coming off of this 4-hour demand mitigation. Now, the POI is obviously not well priced within the bullish external range, but it is important to note that there is no prerequisite or no guarantee that price action will always mitigate the EQ or a well-priced POI before the underlying trend continues. Remember, what we're trying to do is identify potentially high probability scenarios to trade from that fall in line with the underlying direction. And when it comes to establishing a structural range, your well-priced POIs are always going to have the higher probability of facilitating that continuation phase than your POIs that are not well-priced. So specifically going into the first week of May, as price action is coming off of this 4-hour demand mitigation, we understand that the 4-hour is bullish. We understand that the overall objective is a violation of this 4-hour week high. We can utilize that directional bias to keep an eye out for any potential buying opportunities on our execution time frame, the 15-minute time frame, to potentially get involved in a resumption of this 4-hour bullishness towards the 4-hour week high, as we are trading from this 4-hour demand zone. But in doing so, we also need to be aware of the fact that price action isn't trading from a well-priced POI and that there is the potential that it continues trading lower in order to facilitate daily demand. I would personally say that a break and close below this area would be one of the earliest indications that price action is likely to trade down towards this demand zone. And if that were to occur, that in itself would give us a short to medium term bearish directional bias, which we could utilize on any given trading day to find potential selling opportunities on our execution time frame as price action trades down towards that daily demand. Once we come into that daily demand zone, we would then switch our focus to stop looking for selling opportunities, because we would now start to anticipate the potential next bullish leg to the upside, which will look to target that week high. We would effectively maintain that bullish bias out of this POI up until the point that our 4-hour strong low is violated, because the point at which our 4-hour strong low is violated is the point at which our daily impulsive phase comes to an end and our daily pullback phase has now potentially begun. And when that daily pullback phase now begins, that would give us a short to medium term bearish directional bias, which we would then adopt as price action trades down towards this weekly demand zone here. And then we just do the same thing, because now this demand zone is a well-priced POI within the bullish daily external range that has potential to facilitate that next leg up. So our process for establishing a directional bias and our process for identifying potential POIs to trade from and POIs to trade towards remains exactly the same. We just repeat them on the different time frames, and we make sure that we utilize the story that these time frames tell us in unison to have a better understanding of where price action is going to go next. So it looks like it's going to be a very interesting month of price delivery here on EUR/USD. Curious to see how the Fed interest rate decision is going to affect things in terms of the volatility that it introduces into the market. But overall, I would say the price action has been fairly clean for the majority of 2025. If you guys found this video helpful, informative, or entertaining in any way, shape, or form, please make sure that you hit that like button, subscribe to the channel so you don't miss out on any future content. And as always, I appreciate you guys so much for watching. Speak to you in the next one.